Yes, it's true. There is potential in crypto, higher volatility than in other equities. But also, unless you are trading with what we call altcoins, chances of your money going to zero are very low. Extremely low.
What's the biggest mistake you have seen financial market participant make recently?
A mistake I've actually made when trading is assuming that markets are rational. I think that's the biggest mistake people make.
Understanding what you're investing into. I think in the Kenyan market, every now and then there's a hot pyramid scheme, scam, Ponzi scheme. And the funniest thing is that most people believe these things because it's their friends recommending it to them.
Hello traders, on 21st of February, we had our latest bullish event whereby we were joined by a panel of market participants, starting with Gichuki Kahome, who is a financial markets educator and analyst. Also, we had Anthony Kiambati, who is also a dealer and a broker within the Kenyan Nairobi Securities Exchange. And finally, we had Mr. Saruni Maina from Binance Africa. We delved into a range of topics from crypto, latest Kenya Pipeline IPO, among other investment avenues within Kenya. Tune in, hopefully you learn, educate yourself, stay bullish.
All right. So my name is Rufas Kamau. I work with FX Pesa as a market analyst. I also do a lot of educational content on investing, Bitcoin. I also focus mostly on trading. And at the same time, I'm a co-host of the Bullish Banter podcast. And today's event is about Bullish Banter, which is sponsored by FX Pesa, which is a financial markets broker that allows you to access global markets right from the comfort of your phone. So if you don't have the app, make sure you check it out. It's called Equity Trader. So it's equity with an I, not Equity Bank, equity with an I, equity. Install the app. From there, you're able to access global markets instantly. So I believe we have a very amazing panel here. The introductions were a bit short, kidogo sana. I have known these guys for years now, and I believe it's a very experienced panel from Gichuki Kahome with a lot of experience in investing education, local NSE. Nili nauza sana Kenya Pipeline Company ama Barclays Dera. So Saruni here, introduction yake ni kidogo, but he's so big. Kumpata ilikuwa shida. He's constantly on the move. He handles Binance Africa, so he's constantly on different countries. Getting him here was quite a task, but he's here. Thank you for joining us. Anthony Kiambati. I don't know what. Thank you for joining us. Sure, you guys have been looking forward to meet people who are actually doing it, and running a fund in Kenya is not a joke. I wonder how they survived into 21. I believe he'll have words for us. Thank you.
Yeah, and we'll just begin there. How many have participated in the Kenya Pipeline IPO? One. Who else? Two. Who else? Okay. I guess for those who make their money from the market, and if you have been listening to Bullish Banter, we normally say, where do you park your loot, right? And I guess this is one of the avenues whereby people try to explore and secure their future, to say the least. Anthony, we have had multiple revisions on valuation of Kenya Pipeline. I don't know if this is within your purview or NDA ko hapo katikati, but from the IPO market, not only just Kenya Pipeline, but also Family Bank, which is sort of being hinted at being listed. Is it a good positive sign for the local stock market?
Hello everyone. So I think KPC is one of the best assets that we're going to have in our local markets. And one of the major reasons is because of what we're seeing, even how capital is transitioning in the global markets. So for the longest time, we've seen a lot of capital going to the US market, mostly the AI stocks, the likes of NVIDIA and all that. But what we're watching at the moment is that we're seeing a trend where capital is shifting to the emerging and frontier markets, the likes of Colombia, I don't know, Peru, South Korea, and then also African countries, the likes of Ghana, Kenya, and all that. So the reason that is happening is because we're seeing, for the longest time, emerging markets have been very undervalued as compared to the US market, right? And the question that global investors are asking themselves is, where can we allocate capital for the best return? And emerging markets and frontier markets have become the best place for investors to actually do that. Now, back to Kenya, with that in mind, another thing you need to factor in is that we're in a macro economic environment where the CBK is actually cutting rates. So what that means is we're going to see rates going down, actually to, I think, a target of around 7. So we're going to see rates going down. And the way markets work is that when rates are going down, equities or other stocks tend to perform well as compared to bonds. So most people are transitioning from holding fixed income assets, the likes of bonds, and going to equities. And that's why if you check how the Kenyan market has performed this year and last year, the market was up 50% last year. And already, I think by now, the market is already up over around 7% to 14% by now. So that's the thing. So already the general environment is already positive. Now, talking about KPC itself as an asset, KPC has one of what we call, I think Warren Buffett calls it a moat, which is a specific economic advantage that a company has over its competitors. The biggest moat that KPC has is the barriers of entry. KPC has a huge infrastructure across various countries in the region, which is very hard to replicate. Any company that tries to do that, that would be very hard to do. And that's the huge economic moat that KPC has. And that's why you're seeing so many people rushing to actually own that asset. So there's another question that has been there about valuation, where people have been saying 9 bob is overvalued. I don't know the value, the proper value is actually 4 bob. I think the highest valuation I've seen is actually 12 bob. That's the highest valuation I've seen. So the biggest mistake people are making is the classification of KPC. So most people are classifying KPC as an energy stock. So they are comparing KPC to KenGen and KPLC. KPC is not KenGen, KPC is not KenGen, and it's not KPLC. KPC goes beyond energy to actually cover transportation. So you can actually classify it under transportation and energy. So that's the thing that's the first mistake people are making, because they're comparing the P ratios of KenGen and KPLC to KPC. So that's the first mistake people are making. Now on to valuation, because I work for Faida Investment Bank, and Faida was the arranger of that program. So in terms of valuation, how did they come up with 9 bob? We don't have any company like KPC in the region. So for them to value that company, they had to look for companies that do that, but are also in the emerging markets and frontier market space. So they went to India. They looked for Indian companies. So that's why they got the valuation for KPC. And that's another thing people need a lot of clarification on. So the 9 bob is not from the likes of KenGen, I don't know, KPLC. They looked for a company that's in the same, that's doing the same thing as KPC, and there's no company like that in Africa. So they decided to go to a similar market, which is like the likes of India, and that's how they came up with that valuation. Cheers, guys, and all the best. And make sure you invest.
Mr. Kahome, do you agree?
Hello again. So I partly agree with Kiambati's sentiments. So what I agree with him is that KPC has a good moat. So moat is just basically an economic advantage compared to competitors. So on that part, I fully agree. Now, when it comes to valuation of equities, different investors, maybe different financial analysts can use different valuation models, but maybe the easiest to use is using multiples. So multiples is where you are comparing companies in the same sector, maybe in the same country. For their earnings, you can use various multiples that compare companies' financial statements to its price. So you can connect a company's price to its balance sheet by maybe using the price to book ratio. You can compare a company's earnings to its price to its profit and loss statement, maybe the income statement, using the price to earnings ratio. You can compare a company's price to its cash flow statement using the price to free cash flow ratio, maybe the multiple. And that's one of maybe the widest, maybe the easiest ways you can use to value a company. So whenever investing, maybe this was borrowed by Warren Buffett, where he's father of investing, Benjamin Graham, whereby usually says that you must have a margin of safety whenever you're investing. So if you think that maybe the fair valuation of KPC is 9 shillings, you must have a margin of safety, so that maybe in case you are not 100% right, you still have enough safety room for you to win, or maybe you have a huge room for error. Even for engineers, usually have what you call the safety factor. Whenever you are designing anything, you must have a safety factor for you to allow for any errors in your design. So for Kenya Pipeline, yes, it has its moat, it has its unique offerings, but then again, if you compare the price that we are getting for Kenya Pipeline at 9 shillings per share, then if you use the multiples, even if you use a discounted cash flow analysis, you're going to still find that maybe the company is trading at a significant premium, not even a small premium, because if you are looking at investment opportunities in the NSE, whereby you stand to even win and have a very huge safety margin, if you look at the same companies in the same energy sector, maybe Anthony was trying to tell us that maybe we cannot compare KPC with the energy sector stocks, but I believe that's maybe one of the best benchmarks that you can use. So if you're looking for dividends, or if you're looking for capital gains, if you're looking at the undervaluation of a company, looking at two metrics, that's the price to earnings ratio and the dividend yield, you're going to see that KPC ranks very poorly compared to its competitors. That's hugely Kenya Power and also KenGen as well. So if there was any NSE investor who was looking to invest in Kenya Pipeline, whether it's for dividends, I think you'll get almost 2 times or 3 times what KPC has been giving investors. Then again, if you're looking for an undervalued company, Kenya Power has been trading for a PE ratio of less than 1 for, I think, for over a year. Currently, it's trading at a price to earnings multiple of about 1.2, 1.3. So if you compare to that of KPC at 22, I think that's a pretty simple conclusion to come to in terms of the valuation of Kenya Power. But then again, yes, some things might require premiums based on their business structure and their company profile, but I don't think Kenya Power has that, even the growth potential, because even from the analysis reports that I have seen, I think projections in terms of earnings, future earnings, they're projecting that maybe once Kenya Pipeline is sold, that maybe they have been growing at about 9% per annum, that they can now grow at about 12% per annum. So not that much in terms of growth, because I can just give you a fun fact. One of the biggest companies in the world, NVIDIA, is currently trading at a forward PE of 23, 22. Now you can imagine even KPC is trading at a PE of 22. So just imagine NVIDIA is growing earnings, and is not earnings but revenue, at 60% year on year. And KP is growing at projected 12%. So I believe maybe we were taught by different valuation teachers, but for me it hasn't made a lot of sense. But it's always a good thing, because analysts always have different views, and that's why at the end of the day we'll always have funds that beat the S&P 500 and funds that underperform the benchmarks. So it's all about looking for the alpha in the market, and that's where differences and opportunities come in.
Banters are flying left, right, and center. Do you have a rebuttal for him?
I think my response would be quite interesting. So one of the mistakes that people make, and a mistake I've actually made when trading, is assuming that markets are rational. I think that's the biggest mistake people make. So everything else, according to analysts, everything should work according to what they learn in school in terms of valuations and all that. But when you look at markets are never rational. And markets are heavily influenced by sentiment. If people decide, let's say, like, if people decide today, look at a company like Palantir in the US. Palantir is one of the most overvalued companies in the world. Another example would be Tesla. Actually, among the Magnificent Seven, Tesla is one of the most overvalued companies in the world. But if traders decide today Tesla is the future, Tesla will go up, despite whatever you say about valuation. And that's the thing. So the sentiment is very positive around that asset, and for me, that's the biggest point of confidence when it comes to KPC, especially a lot of interest around institutions, from institutions, not only in Kenya, but from countries like Uganda and all that. So never assume that markets are rational. Always have that benefit of doubt where, yes, this is the right valuation, but sentiment has a huge effect on markets despite whatever valuation you might think.
I just want to say, as Anthony has said, that markets are not rational, which is very true. But I think, Anthony, what you're not seeing is that is exactly the problem that KPC is facing. KPC has a PR problem. The reason why only 2 or 3 people here are the ones who've participated in the IPO so far is because of that simple PR problem. And as you said again, which is very true, the market is very sentimental. So if whoever, and I won't get into names, if whoever is pushing KPC is not favorable in the market, then it becomes detrimental to the shares themselves. How many messages have you received from random, on your phone, buy, extended 4 days, buy again, And I'm not even into shares like that, but even for me, I'm like, but I'm not force. Simuweke kwa market tuone.
Maybe as we come to the wrap of this discussion, for Kahome and also give Anthony a chance to respond. Given the way Saruni has mentioned that maybe there's a PR problem in a KPC, but ideally people are excited in the IPO market in general, like more listing, they want a vibrant NSE. Do you think the way reception, it's always good to get negative feedback because you know what you're doing right, what you need to improve on. What does it say about the future participants in the NSE, given there have been even independent analysts who have become, everyone now is an analyst. Like Anthony said, market, there's an expectation from analysts, but everyone now is very much vested, including Saruni and buy. Does it mean that in the future, now that people are being, accountants, analysts, portfolio managers, it's a positive thing for the current stock market in Kenya?
Okay, so I'll start this by reviewing how the NSE has performed over the last couple of years. So we usually gauge the performance of the NSE using an index called the NSE All Share Index, which is an index that tracks the performance of all listed companies in the NSE. So if you look at the performance of the NSE, it has been quite positive over the last 3 years if we include 2026. So year to date, or maybe 2026 so far, the NSE is already up 12-13%. Last year it was up 51%. It was the best performing stock market in sub-Saharan Africa. In 2024 it was up 34%. It was the best performing stock market in sub-Saharan Africa again. Then in 2023 it was down negative 27%. In 2022 it was down negative 17%. So currently we are on an upward trajectory, and there are so many positive things that are going well for the NSE. So for anyone I was actually joking with a friend that day, and I was telling them, for anyone who bought any share, regardless of whatever company you bought, regardless of the company that you bought over the last maybe 1 or 2 years, everyone has probably made money, regardless of whatever company you bought. So that tells us, it does not mean that you are a very good stock picker or a very good analyst. The market has just carried all boats too, with a bullish momentum. So, like I mentioned, a lot of things are going well for the NSE. So, good performances over the last 2-3 years. Interest rates are coming down. We have ZD Trader coming in, whereby now everyone with just M-Pesa PIN you can buy shares. We have 3 IPOs stroke listings lined up for this year. So I believe there are so many positive things that are happening in the capital markets, and then also a lot of fund managers are getting approvals. The other day we saw NSSF getting the mandate from the regulators that they can now invest only 60% of the investment in the fixed income securities, that is in bonds. So they're also going to have a fair share more in equities. So like I said, a lot of very good things are happening in our NSE. So we should expect the bullish momentum to continue. And now for everyone who was investing heavily in the NSE in 2023, I think they are the biggest, the people who are being rewarded the most. Because in 2023, companies like Safaricom were trading at about 12 shillings, Kenya Power was at 1 shillings, KCB was at around 23 shillings. Today Safaricom is at 34, KPLC is had hit an all-time high of 19, KCB is at 70s. So for anyone who bought stocks in 2023, regardless of the company that you bought, you probably made a lot of money if you invested a lot of money.
Excellent. Now, PR problem, Anthony. Anyone who wants to get started with stock trading and even investing, you can now explain the procedures, and then they can go ahead and start the basics of starting.
Okay. So there are two ways to go about it. There's the typical one, the classic way, where you need a CDS account, and then there's a new one where you can use ZD. So let me start with the old way, where you use a CDS account. So let me give you a little bit of history. So before 2001, we used to have physical share certificates, where when you buy shares, you get a physical certificate. Then there was an act of parliament that led to the establishment of the Central Depository and Settlement Corporation. So that's where we get the word CDSE. So Central Depository and Settlement Corporation, which basically what they did is, instead of holding physical certificates, you get a CDS number, and then your shares are stored in an electronic format on the platform, the CDSE platform. Now, for the CDSE, we build up on that. We get the brokers, the trading participants. We call them trading participants, the stock brokers. So stock brokers allow you to access the market. And how they do that is they provide a platform, let's say an app. Some of the best apps so far, we have AIB DigiTrader, AIB. So AIB, then space, DigiTrader, DIGI, then Trader, AIB DigiTrader. We also have Trader by Faida, but I think I'll recommend the one I use because I use AIB DigiTrader. So that's an app that allows you to access the market. So there's usually this question of, do I lose my shares if the app goes down? You don't lose your shares because remember, I told you CDS is the underlying holder of those shares. So the broker only helps you access the platform. So, and what you do is you open a CDS account via that broker. In terms of requirements, what's required? You just need the normal requirements, KYC requirements. You need your passport photo, your national ID, and a copy of your KRA PIN. And in some instances, because we are grey listed due to the AML regulations, they might ask for a 3-month bank statement. So that's one of the new implementations that I've been doing just to make sure that we are out of that list. So they might ask for those details, the 3 months bank statements. In terms of timing, you'll get your CDS account within 24 hours, 24 to 48 hours. Charges, most of the time they'll charge between 200 bob to 1,000 bob for account maintenance. So there's something I need to tell you guys. Always ask your broker, if I open using the app, will I get lower fees compared to opening using the forms? Because there are some people who prefer to fill the forms and then they send to the brokers. So sometimes if you open using the app, your account maintenance fee, annual account maintenance fee, will be around 200 bob. But if you open using the forms, they'll be 1,000 bob. So always ask that, some clarification on that. So those are fees. In terms of trading fees are usually around 1%, 1.6% to 2% per trade. So if you're trading 1,000 shares of Safaricom is currently at 32, so that's 32,000. So 2% of that 2,000, both ways, both when buying and when selling. So those are the only fees. So that's the traditional way of owning shares, where you have a CDS number. Now, there's the newer way of owning shares through Safaricom ZD. So what Safaricom did is they got what you call, it's like a nominee account, right? So an omnibus account, basically. What that means is they opened a single account with Kestrel. Kestrel is one of the brokers in Kenya. They opened a single account. Actually, I think it's S something 21. So that's a single account. And then they give access to all of you guys, access to that account. So you think you're buying shares but via your individual account, but you're actually buying shares under that one account. And then that account pulls all those orders into the main market. So for us who trade Safaricom, for us who trade in the market, we usually see that code Z something, SZ something 21, and then you know that as an order from ZD. Okay, so that's how it works. So you don't need a CDS account for that because we already have that account by Safaricom. So it's the easiest way to do it. The only issue is some people might prefer to actually have an individual CDS account. And then another clarification, if you already have a CDS account, the shares are not transferred to ZD. So the ZD account are a different lot of shares compared to your CDS. So I have a ZD account. Any shares that I'll buy using the ZD account will be for ZD. Any shares that you have with the CDS account will be for the CDS account. So those are the two ways in which you buy shares in Kenya.
I hope that addresses the PR question. On to the next chapter. We have had multiple, I would say, interest within the crypto market, and there have been inquiries, even from funds in Kenya, given the way crypto has been, or rather Bitcoin has been doing good returns. With the new asset bill, and of course Saruni will also answer this a bit, how do you fund managers, maneuver, and given that now there's a bill you need, does it allow you to put in some allocation to that sector?
Okay, so for asset management, specifically, I think the Capital Markets Authority, their work is to basically license us and regulate the market. They're very uptight on crypto, and I understand why, basically because of the risk aspect of it. And remember, we always say for us, our main job number one is actually risk management. We would rather even give you zero, but not lose your money. So risk management is key for us. So with that in mind, crypto has been like quite a hard sale for us to convince CMA to approve. So the easiest way, or rather the closest we can get to crypto, is using the crypto ETFs, the IBIT, the iShares Bitcoin ETF. I think that's the closest we can get to crypto, but direct exposure at the moment could be tricky. But there's a lot that is happening behind the scenes in terms of board meetings and all that, to make sure that the regulations are eased to allow fund managers to actually trade crypto.
So clarity number one, it's not a bill, it's a law now. Ideally, you can now legally trade crypto. No one should ask you a question, no one should threaten to arrest you. But what we are waiting for, as Anthony has mentioned, is just now what we call sub-regulations. So the law says crypto is legal and outlines a few things here and there on what is recognized. And then now regulations now come under either CMA or CBK, depending on what kind of activity you're doing. And those are like the bylaws, just to bring something closer home. It's the bylaws that says, okay, this is the person who's licensed to do P2P, for example. These are the entities that are licensed to offer exchange services, so on and so forth. So in terms of uptick, especially with, allow me to use the word traditional, with traditional fund managers, to be very honest, there's been a lot of interest. And what we've seen, without mentioning names, is all the way to even banks coming, I'll speak for Binance, coming to us and asking, okay, we've seen our customers ask about this thing. They're like, okay, I have this amount of money, I'd like to switch my portfolio and hold some crypto. And I think I mentioned this during our last podcast, where I say there's even people who come and say, I'd like at least 30% of my portfolio to be in crypto. And this is coming from fund managers themselves. So what they're doing is they're coming to us and saying, okay, we need to understand this thing. So one of the biggest barriers that we have currently, we've seen in the market, is that fund managers themselves don't fully understand crypto. Hence the problem. Because you're finding, maybe it's Rufas. Rufas is a billionaire who really doesn't care. He just wants his money to grow. So he'll come and say...
Guys, I'm not a billionaire.
He'll come and say, okay, convert 30% of my $1 billion into crypto. So it's Anthony's job to make sure, as Anthony said, that you de-risk Rufus's money so that it doesn't go to zero. And yes, it's true. There is potential in crypto, higher volatility than in other equities. But also, unless you are trading with what we call altcoins, or for lack of a better word, shitcoins, chances of your money going to zero are very low. Extremely low, especially if you're touching on the likes of Bitcoin, Ethereum. Yes, it will fluctuate. You might buy it at 80 something, and 2 days later it's at 60. Of course, your tea is going to start tasting like Gilbey's, but at the end of the day, chances are it's still gonna go back up. So we are getting there, and this year for the Kenyan market, it's going to be huge. I won't lie to you. I'm not saying buy anything. You could take your time to watch, right? Because as a smart investor, this is the year to learn. If you've not learned anything about crypto, this is your time to really now start looking into it and go to the people you trust. If you trust Faida, you go to Faida and ask them the questions around how can I convert my portfolio into crypto, or how can I hold? And now it's Faida's job to ensure they are well educated so that they educate you and de-risk your money. So we'll get there. We are not yet there, but we are getting there slowly. Yeah.
Sorry. Kahome, given you are in the investing in education phase, and I believe some time back, you are not very much pro-crypto. We thank Rufas for that. How do you answer such questions? This is a guy who is like 70 years old, retired, getting his pension, watoto wamesoma, they are well off. Somebody here wants to get into this space, and you hear Satoshis, you hear Binance, you hear FTX failing, you hear regulated entities saying we prefer to get into markets where we are familiar with volatility. How do you make sure that these guys actually understand what they're getting themselves into and make sure that the path to entry is smooth? Because there are those who also trade on CFDs, and perhaps what is the main difference between the two?
Okay, so I'll answer that in two ways, or maybe in two parts. So the first part is on education, like you mentioned, and then the second part is on adoption. So maybe I can start with the second one, which is on adoption. So if you look at how crypto, maybe a Bitcoin as an investment recommendation has been adopted in the financial markets, both maybe starting from the traditional finance side, you look at maybe around 2017 was the first time that fund managers, investment banks started recommending that investors can have maybe at least 1% of their portfolios in Bitcoin or crypto. That was around 2017. And guys like Tom Lee they almost lost their jobs at FundStrat by recommending that clients actually invest 1% of their portfolios in Bitcoin. And then fast forward in 2022, 2023, the uptake surged. Now investment banks, fund managers started recommending maybe 1 to 5% allocation into Bitcoin and crypto. Nowadays, I think it's a common. Even Ray Dalio, who is a huge believer in gold and commodities, he also says that who also runs the largest hedge fund, he also says that your portfolio should have at least maybe 10 to 15% allocation in both gold and Bitcoin as well. So the adoption has increased, even as you look into other global fund managers. The most surprising one for me was Vanguard. So Vanguard had initially said that they will never allow their clients access to crypto products, but then last year they reversed that, and they also now are setting up crypto and Bitcoin ETFs. Also, if you look at the biggest sovereign wealth fund, which is the Norwegian one, they also have a big access to Bitcoin currently. So all major players, institutions are now joining in, because crypto and Bitcoin was initially a retail investors' choice of investment, but now institutions are coming in big. And if you look at the inflows going both via the IBIT, that's the maybe other crypto ETFs, then as well via the digital asset treasuries, that's the DATS. If you look at both strategy, and if you look at Bitmain immersions by Tom Lee, they're both getting some pretty good inflows, and they're also among the most traded stocks as well. So the adoption side is here. So everyone is now looking at having something different in their portfolio. So if you have your special funds, you have your NSE, you have your global stocks, you're also looking at just having an introduction, maybe some exposure to crypto, because in portfolio allocation, having an asset like Bitcoin in a portfolio, it improves what you call your risk-adjusted return, which is measured by the Sharpe ratio. So that's a plus for investors looking at just having Bitcoin in their portfolios. Then now the education part. I think the education part is the biggest challenge, because now in crypto and Bitcoin, you have to understand quite a lot of things if you want to not necessarily make money, but also have some conviction with your investing, because you don't want to just be joining the bandwagons that Bitcoin has hit an all-time high of 126K, you are joining in, crypto has bottomed at 60K, you are leaving. So you must have the conviction, because the one thing about Bitcoin is it's not a universally agreed upon thing that it's a good thing to invest in. Every day we have Peter Schiff and Michael Saylor arguing on the internet between gold and Bitcoin. So people say that the net asset value, maybe the intrinsic value of Bitcoin is zero. So if it has gone to 60,000 right now, just know you are still being given a discount because it's going to zero. So the people were arguing that way. So you must get your you must get your education right, you must get your conviction right, and that only comes through education. So even for us at the Money Master and at the Wealth Atlas, our biggest point when it comes to recommending Bitcoin starts with education. So just understand what you're getting into. Do you want to get into Bitcoin alone? Do you want to get into other cryptocurrencies? Do you want to invest in Bitcoin directly, or do you want to go via the ETFs, or do you want to go via digital asset treasury company? So understand the risks as well, and also the role that it plays to your portfolio, and also the volatility that comes with it. And also the risks, actually the risks, that's the biggest part. Because now when it comes to the risks, depending on the method that you're investing in, you are subjected to different risks. So if you're buying crypto directly via Binance here, we saw what happened to FTX. I'm not saying maybe that's what could happen to Binance. Then you have the aspect of, you must self-custody your coins. I think Rufas was the biggest person who kept saying, not your keys, not your coins. So that comes in again. Then you have trust issues when it comes to the ETFs again. Then for the DATs, once leverage comes in, it becomes an even bigger challenge. So education and adoption, I think over time they're going to converge at some point, and maybe that's when you're going to have crypto being mainstream.
Yeah. Let's do a quick poll, right? Anyone who holds shares in the NSE, just a show of hand. This is a lot of investors. Anyone who holds Bitcoin or any other cryptocurrency? Anyone who holds a live trading account in Forex? This is amazing. Are you guys investing in everything? So I think for our audience, from the show of hands, it means that a lot of us are mostly on the line. If something happens, your baby touches the buy or sell button, things could go like really bad. So I believe this is a room full of risk managers, and we have seen a lot of changes happening in the markets. I personally, being like insanely invested in Bitcoin, it's not going so well. We're down, what, 47% since October last year. So it has been a winter, and I believe if you listen to the last episode we did with Saruni, I think Bitcoin went a bit lower. Yeah, it was just like a week ago, and prices are still going down. So volatility is kind of normal to us. So with all this happening, the VASP regulation now, a lot of companies are getting licensing. Kiambati is also looking to get some exposure into Bitcoin. And usually there's this 3-year cycle when Bitcoin goes up, and then 1 year you get price going down. It's a cycle that happens every now and then. So 4-year cycle, 3 years up, 1 year down, but last year wasn't so beautiful. This will be a question to Saruni. What is in it for Kenyans? Where are the opportunities in crypto?
So, Kenyans already, you're being thrashed at by your government. Now you want to add crypto into the list. But I think I'll peg that answer on education.
Are you guys hiring? We want the opportunities. Where is the money?
The money is in all the assets, to be very honest, right? Even as things are going down generally in the market, there's still people who are making money. So with the crypto space, it's usually very, very difficult to recommend directly and say, these are the assets for you to buy, because it's a very personal thing.
Well, it's not just the gains.
Yeah.
As you have seen from people raising hands, right? People are invested in Forex. They are looking for every single opportunity available in the market. Are there opportunities in P2P? Jobs? Are there opportunities where you could make $1? If I have $1,000, I'm 130,000 shillings right now. Where are the opportunities?
Okay, now, let me answer in that direction. So yes, there is definitely opportunities in the market, apart from the trading side, which again, you go do your own homework. On the other side of things, starting with what you've mentioned, the P2P market. So for anyone who doesn't know what P2P, it's just peer-to-peer. Essentially, it's trading crypto and fiat directly with one person. There's platforms that offer, okay, I've used the word platform, but there's exchanges that offer a platform for you to be able to do P2P in a more safe manner. Of course, Binance being the lead even here locally with that. And a good number of people who've actually interacted with the crypto have interacted with the Binance P2P market. So essentially what happens in this case, if I use Rufas as an example, is that I have USDT or maybe I have Bitcoin and I want to cash out my Bitcoin. I have two options in how I cash that out. Either I cash it out directly on Binance Exchange with the rate that Binance is giving me on spot, or ideally, I could cash out with a P2P market. So in this particular case, I'll go see what Rufas is advertising as the rate that he's giving for Binance to Kenya shillings. If I like the rate, I send him my Bitcoin equivalent of whatever amount of money I want, and Rufas will then send that to either my bank or my M-Pesa. And a while back, there was a lot of issues and trust factors around P2P. But right now it's gotten much, much better. Chances are your account will not get frozen or blocked because you traded over the P2P market, but still exercise caution, trade with people who've been verified. I believe this is something that is common across all known platforms. If any platform respects you as their customer, they will ensure that they have verified traders on the P2P market. But ideally, it's also always best to just trade with someone you know, especially if you're dealing with a lot of money. You know, if you're trying to cash out your one Bitcoin right now, maybe you bought it at 30K, now it's at 60. So for you, you're satisfied. You don't go and open a random P2P market and just trade. At least that one find Rufas, I'm sure, on your liquidity. But yeah. Then in terms of the job side, right now, as I mentioned earlier on, the crypto market is becoming very, very big within the continent, within Kenya. And so there is always jobs. For example, at Binance, we are currently hiring for 3 main roles for Africa. There's a marketing manager role, there's a growth manager role, and there's a business development role within the payment space. So always be on the lookout. I believe that all of these exchanges, you know, it's not just Binance, always post these jobs on their websites, on their careers page. One thing that I have, from interacting with a lot of people, I've realized about Kenyans is we don't like looking at careers pages. We always think that to get jobs, someone must tell you or you must know someone. Personally, for me, I didn't know anyone with the job that I got. So I'm a testimony that you can just get the job. So usiogope kufungua hizo careers page. Apply to as many opportunities as you can. And then I think the last opportunity that is now becoming really a thing is on the community manager's part. You know, people who are well educated and well-versed, you have knowledge on how crypto is. You know, you're the like that will go to Anthony, ukalisha Anthony chini mwambie usiogope hii kitu. This is how we do it. You never know, Faida might hire you. So it's all about being out there. A lot of you are sitting on knowledge that even most of us here on this side don't know. But people just like to sit on that knowledge, you know. Start posting on TikTok, start talking about these things, opportunities will come and find you.
Yeah, bullish banter na kazi. You see, we are trying, not only just giving you knowledge on markets, kazi pia iko. To the global side, you see, Kenyans are curious about the financial market, and we have seen some trends from the global side whereby retail investors are leading the conversation. As you have rightly mentioned, retail traders are leading the path in either P2P trading, the discussion on crypto, but from the institutional side, I believe in US it was the retail traders who basically pushed for even the vanguards to join in. Is it that Kenyans or rather Africa is now following what's happening out there once it has been proof of tested, or do you expect in the near future from your institutional side, maybe they will listen to what Gen Zs and how they invest, given how ZD Trader is basically taking up almost 50% of volumes traded in NSE? Are we looking at a place whereby retail investors will lead the conversation on financial markets in Kenya?
So the biggest issue has been traditional fund managers have been quite comfortable in terms of returns, and investors are asking for more. So for the longest time, getting 10% annually was okay, but right now investors have a lot of access to information. I think that has been the biggest thing. So investors are asking for more. Like for us, we usually say that we aim to give 20% annually after fees. That's the OG Special Fund. So you see, 20% is already higher than what most bonds are giving. So that's the major thing that's driving a lot of retail participation, especially towards the global markets, returns, looking for better returns, and also looking for value. So the thing is, with what we're seeing in terms of the technology and everything, AI and all that, the global markets provide a space where you can actually invest, and these are markets that are proven. So this thing that is said about the US market, it's the only market that I know that has 100% recovery rate. So this, everything that has happened in the past, the COVID-19, the 2008 financial crisis, all these things, the market crashed, but later the market was able to recover. And that's one of the things, that's the biggest selling point for the US stock market specifically. It's the only market with 100% recovery rate, and that's what investors are looking for. Am I certain that in the next 10 years my money will grow? So that has been the biggest issue, especially in Kenya. You find that there's some companies that you're told you hold for 10 years, but 10 years, if you look at some companies at the NSE, 10 years ago, they're still down from where they were 10 years ago. So that's the biggest selling point for the global markets. And I think that's where we're headed. And I'm seeing a lot of interest, especially people asking, how can I open an Interactive Brokers account? So Interactive Brokers is the platform used to invest in US shares. Yeah, so.
Okay. To Saruni. What is the one myth that you have seen within the crypto space that you think people should learn?
To be very honest, and I know the gentleman on my right are probably going to fight me for this, but the one myth is not your keys, not your coins. I think that used to be very, very true earlier on in the days, but the market has really matured. The whole industry has really matured. There's a lot of oversight. You know, FTX is a very good example of what could go wrong, but we give credit where credit is due. There's a lot of learnings that came from FTX, and a lot of exchanges, for example, you know, put in extra security to ensure that people's money is protected. So to give a very good example in terms of comparison between self-custody versus using exchanges would be the conversation around having a CDS account versus using ZD, right? And I mentioned this to tell you, for a lot of people, you know, you've even seen it online. They're saying, no, make sure you have a CDS account so that you're 100% sure those shares ni zako. Not someone telling you that, you know, I've saved your shares on a platform somewhere that could technically also disappear. Versus someone will say, but ZD gives access. So if we are going to be talking about adoption, we have to look at it from ease of entry. It has to be something that Mama Mboga can easily buy, can easily get into, and say, I didn't need to jump through hoops. I didn't need to understand what a cold wallet is. So, as I mentioned in the podcast last time, yes, if you are a crypto nerd, you understand how things move, you understand the whole market, please, by all means, ensure you keep your own keys, keep your own coins. But for the mass market, let them go to exchanges. You know, for us at Binance, we have a $1 billion fund as security insurance. That means if for some reason the sun doesn't shine one day and Binance goes down, the insurance fund will be paid to users based on what you are holding. So that's just one of the ways that the industry has course corrected to ensure what happened to the FTX doesn't happen again.
Okay.
Yeah.
Thank you. A fire question for you, Kahome. NSE, crypto, global ETFs. Pick one.
That's a pretty tough question because my friends on my right and left will be laughing at me for the choice that I pick. But maybe I'm going to pick a very wise, maybe a very interesting choice. So I'm going to go with global ETFs because with a global ETF, I can access IBIT for Bitcoin, and I can also access the MSCI African Markets ETF So I both have exposure to global equities, the African or maybe the sub-Saharan equities, and also Bitcoin. So I can have
I think he's trying
a
to be
piece
politically
of everything
correct.
that I want.
This one. Come on, you guys know, like, for us, we are in deep with Bitcoin, right? I believe some would be 10 or 20% of the episodes with British Banter have been Bitcoin, Bitcoin, Bitcoin. So on one side, I know Kahome is trying to be politically correct, but he's also knees deep.
All right. Anthony, Kenya has a wide variety of assets, from Ploti Maguta Maguta, from NSE, bonds, MMFs. Which is that one asset you'd advise someone to hold if they're planning to put their 1 million shillings for 20 years?
Okay, so I'm going to classify investors into various categories based on risk and also...
Just one.
Okay. Kenyan stocks.
Sorry?
Kenyan stocks.
Stocks?
Yeah.
So the NSE stocks 20 years?
Yeah.
Okay. Final question. This is, I guess, it will apply to all of you in some way. What's the biggest mistake you have seen financial market participant make recently?
Okay, so for me, I'll just, one statement, improper risk management.
Mm-hmm.
Getting out too early.
Not understanding what you're investing into. I think in the Kenyan market, every now and then there's a hot pyramid scheme, scam, Ponzi scheme. And the funniest thing is that most people believe these things because it's their friends recommending it to them. So I remember there's a time I had a client, we were having a session whereby we were looking at asset allocation with their portfolio. And after giving them their recommendations, they decided, they decided to sit on it so that maybe they can think through it. Then over the weekend, they had a boys' night out. This guy came with this crazy idea. There's this program whereby you can get 20% per week. I've already quadrupled my money. So the guy maybe trashed all the advice I'd given him and he put in these friends' projects. And the following week, he was telling me that he had just lost all the money that we were discussing on allocating. So I think every year we usually have quite a lot of investors losing a lot of money in those scams. So I think education, maybe understanding what you're investing in, is a pretty important thing to do.
Thank you.
Well, for me, I think it's emotional decision making. That has been quite a big mistake in the market. So if, for instance, you get a couple of messages, you meet a couple of guys, they say we are buying KPC shares, the price is 9 bob, you get emotional and you jump right in. Investing is more of a patience game. We all know that, especially for traders. So when you see people panic selling Bitcoin because it has dropped by 10%, I think emotional decision making is what I've seen as the biggest mistake so far.
Thank you. We'll have like maybe 10 minutes for Q&A before we go for a short break, and then we can begin the debate. So if you have a question, please raise your hand. I'll give at least 5 people, and then to any of them. Be brief with your question so that we can allow more.
So I've heard all of you are big on Bitcoin, and
not all of them, but most of them.
Almost all of them are like positive on it. No one here has a negative sentiment towards it. I've heard, I don't remember the name, but I've heard you talk about understanding like the fundamentals of what you're investing in. So for me, the way I look at things, what blockchain is about is it's about decentralizing computer networks. So when you look at Bitcoin with that aspect, doesn't make much sense, because Bitcoin as a decentralized network is slow, it's inefficient, and takes a lot of time to even do a simple transaction. We know of I know about Lightning, Bitcoin Lightning, but it's still not something that is plausible. So for me, I'm not against blockchain. I'm a developer on a blockchain known as SUI. And for me, if you ask me why I'm a big person who is investing, why I'm investing in SUI in short, is because I know SUI is a network that is strong enough to handle the demands of the internet, but Bitcoin cannot. So why are you guys investing in a network that fundamentally can't function as its primary purpose?
Remember when we said on the last episode we need NADs on the blockchain? Okay, so
Can we get the questions and then?
yeah, we can take the questions and then we answer mara moja. You are invited for the next bullish banter recording.
Hello. I haven't heard any of you talking about the quantitative finance. Oh, what's your take on quantitative finance? And then another thing is, I heard somebody, I was very surprised to hear that the Kenyan market has the derivatives, the options and the futures. I think you'll give me a clear elaboration on that.
So my question to the entire panel, it's more of, you mentioned education, but aren't, let's say for the Kenyan market, is it too much underestimating, or let's say understanding business cycles and economic cycles? Because even when you're looking at, as a previous audience has asked, when it comes to the end of a bull run, if the market understands economic cycles and business cycles of each sector, then it's easier for them to make a good decision on what they're going to invest in. On the second part, I'm not a believer in Bitcoin. I think we've had that discussion before. But when it comes to specific, let's say, crypto that are private by default, I think we had mentioned the likes of Monero and Zcash. What will be your opinion on that? Of course, you've called it what you've called it, but on specific aspects that actually ensure the privacy of our transaction, of course, from the state, then I would like to know your opinion on that, Rufus and Jason, or any other individual. Thanks.
Yeah, unfortunately, we will have another session at the end. Allow us for them to answer first, and then after the debate, perhaps you can interact and even ask more. So,
Okay, so I think I'll handle 3 questions. So question 1 will be on derivatives. I think that's what I spoke about at the beginning of the session. And then I'll also talk about the IPO, KPC, and I'll also talk about will ZD Trader, will the hype of ZD Trader more sort of fade away, like what happened with ZDMMF. So let me start with derivatives at the NSE. So there are 2 investors at the NSE. Same thing, going back to the fact of your risk appetite. You can choose to hold for long and actually buy Safaricom, like buy Safaricom at maybe 28 and then sell it at 33. So that's the difference of like 5 bob. So the thing is, especially for the guys who are young, and most of you guys are young, one thing I always believe is that once you've built your capital, you have your MMFs, you have your investment somewhere, it's always good now to set aside some money for growth, to build your money, to build your capital, right? That is, so one of the best options for that is actually NSE derivatives, and that's trading stuff, futures of, single stock futures of stocks that are listed at the NSE. So just a simple explanation of what that is. Basically, we have Safaricom or KCB or equity as the underlying stock. Then you have futures contracts that you trade of those companies. So I'll make it easy as easy as possible. So I'll talk about access, I'll talk about the leverage that you're taking, and also the advantages of it. So in terms of access, how to access the equities. So there's a platform called Avento, AVVENTO, AVVENTO, Avento platform. So that's the platform used to trade derivatives in Kenya. So it's a shared platform between equity, it's shared for equity, it's shared for derivatives and bonds, but for bonds you can't access it, mostly for derivatives. So Avento, in terms of the brokers that offer that, we have Sterling Capital, STERLING, LING, Sterling Capital. So they are both the brokers and they are also the market makers for the market. So market making means basically they provide liquidity for the market. They give you the two-way. So if you want to buy, they'll come in as the sellers. If you want to sell, they'll come in as the buyers. So reach out to Sterling Capital. You can check out, you can check for their contacts on social media or even Google, just Sterling Capital. Okay, what else in terms of advantages? Basically, let me give you an example. Like Safaricom, you need around 450 bob right now to take up one contract. So the way that works is one contract of Safaricom futures is usually equal to 100 underlying shares. So 100, Safaricom is currently at 32. So one contract is the equivalent of buying 100 underlying shares in the spot market. Spot market is the normal market. So one contract, you'd spend around, at the moment, around 445 bob, let's say 450 bob. So you'd spend 450 bob to pick up one contract of Safaricom that has the same weight equivalent of 100 underlying shares. So that's 100 times 32, the price, so 3200. So you're spending 450 Kenyan shillings to get an exposure of 32,000 Kenyan shillings. So that's around times 7, times 6, the leverage. Yeah. So if you want to learn more, because it might be quite complex, I've written a whole article on it. So you can just search me on LinkedIn. I have a whole article on investing in derivatives in Kenya. So just search Anthony Kiambati, Anthony, Anthony, and then Kiambati, Kiambati. Just go to my pinned post. You'll find a post on investing in derivatives in Kenya. But there's some things that you need to update there. So when I was writing that article, the contract size was 1,000 shares per contract, but right now it's 100 shares per contract. So anywhere where you see 1,000, let it be 100. Anywhere where you see 100, let it be 10. If you prefer videos, I also have videos on YouTube. Just search investing in derivatives in Kenya. You'll find it, investing in derivatives in Kenya. So that's it on derivatives. When it comes to IPOs, I think it depends with what you're going for. So if you're a speculator, I think going for an IPO would be really good, because what happens immediately after the IPO, because of the hype, you find that the price might go up to around even 12 bob. If you're a long-term investor, it would be better to buy in the main market after listing. Then the final question is ZDMMF and ZD Trader. So the reason why ZDMMF didn't perform as well, first of all, it wasn't competitive as much. There's always, and then the other thing of misinformation. There's this thing where people think that MMFs are an investment. MMFs are not an investment. They're basically a savings platform. So you don't use the MMFs to invest. You use MMFs to build your emergency fund. And that's why the rates are not usually that competitive, because most people think you're going to put 200 and then you find 400 maybe next month. It doesn't work like that. You see, that's like 100% return. So the reason why that didn't perform well, people were putting maybe their little money, like 500 bob, expecting to double that money. See, that was a problem. So it was about returns. Even ZD itself as an MMF was not competitive enough, because it was among the worst performing MMFs in terms of returns. It was giving almost half what the top MMFs were giving, the likes of Nabo, which were giving a higher return. So the reason why I don't think ZD Trader will have the same outcome is ZD is different. ZD is about ownership. It's about owning assets. And everywhere in the world, one of the things that we're told is you need to have equity. You need to own assets. Yeah.
Okay. Yeah, so there was one around Bitcoin and the inefficiencies of Bitcoin. So maybe just to give a clearer understanding to the audience, there is Bitcoin, the network technology, and there is BTC, which again people call Bitcoin, but that's the cryptocurrency. And technically speaking, BTC lives on the Bitcoin network, right? However, just for clarification directly to you, and I think I could be speaking for everyone here, when we are talking about investing in Bitcoin, we are really not talking about the network. We're talking about the asset itself, BTC. And that's what a lot of people are interested in. And you brought in the case of Lightning, which again is Bitcoin native, the network. And Lightning came in to make payments on BTC much faster. Because as you mentioned, if I was to send you BTC on Bitcoin network, it takes a lot of resources and takes a lot of time to do that. But that was by design. It's actually not a problem per se as how it was built. That was designed that way for whatever reason or the other. Maybe more technical people can answer on the background of that. But it was by design meant to be difficult. So people like the Lightning Network came to try make it a bit more efficient for the use case of payments and quote-unquote money movement. So even when we are saying that if you're choosing to invest in Bitcoin, you invest in it, I can be very politically correct by saying a lot of the people who are buying BTC wouldn't care which network it's hosted on if it could be moved. If you could host BTC on Ethereum today, people will still buy. If you could, it's like, no, personally, no. If you could host it on Sui as well, the people who are still going to buy. A lot of the common mwananchi don't even know the underlying technology. M-Pesa is a very good example, right? People just know I can go, make a payment, I can withdraw the money. The utility is what drives that adoption. The technology behind it, the other day, M-Pesa did a technology upgrade, right? And I remember scrolling through Twitter, and because I refused to call it X, and there was someone who asked, could you tell me which new features have been added to the app so that I can try them? Because that's the common one, that's the person you're dealing with. Them, they know M-Pesa. So if you tell them you're doing an upgrade and they can't see it, anashanga, basi, what were you doing? So I think in this particular case, I would say we need to look at it from two different angles. The tech side is important, but for adoption, the people don't really care about the tech side. Them, they care about what is BTC itself. Can it actually give me utility? If BTC is moving from a speculative asset into an asset that can actually be used for payments, then it has an end goal at the end of the road. Then that is what drives adoption. I see like you have more questions, but let me move on to the other to the other part. Then there was a question on education and local cycles in terms of, I think it was your question, right? Yeah, in terms of economical cycles. So I would say from a global perspective, right, there's an education drive in terms of crypto, where people are being educated on understanding what crypto is, at least on the bare surface. Then if you want to get into the technicalities of how cryptography works, which networks are there, what is Ethereum, what is the ERC-20, what is the Lightning Network and all of that, that is not even layer 2 in terms of education. That's deep knowledge. So what you'll mostly see, and what, for example, I actually push for, is that top layer, right? Remember in high school, ulikuwa kimbia kwa line, pate top layer, ya food. So that top layer is what drives adoption. Someone just basically understanding that this is crypto, this is how this is the role it serves in my education, my financial journey, whether it's for payments, where stablecoins really play a huge role, whether it's for hedging, again, where stablecoins also play a huge role, or for investment, where BTC plays a huge role. So that is that level. When it comes to local economical cycles, I think that's now where we tap into the likes of Rufas, right? For localization of that content. Because you can't stand on a global scale and say, buy. Yet, maybe Kenya is undergoing through a recession itself, and people need more USDC and USDT more than they need BTC. So the localization aspect is what will drive adoption from a local perspective, even with education. I'll give an example with Ghana. Ghana is also working on a virtual assets license framework. And they're at a very similar stage where Kenya is. The big difference is that Ghana has a national level education program on crypto. They're literally running ads. The Maina Kageni version of Ghana is talking about crypto, on radio. They're running billboards from government level, from their central bank level. And that is something also here locally in Kenya we need to also look into. And I wish, the regulators would actually understand this aspect. It's not just about putting pen to paper in terms of what regulations say will get licensed. It's about educating the masses not to get scammed, understanding what is this technology. So there's a role to play by everyone. And then lastly, there was a question around privacy tokens and private cryptocurrencies. I feel like that's a whole other topic if you get into that. But just to put it simply, the crypto market is vast and it's big. The reason why a lot of people talk about Bitcoin is because there's a lot of hype around it, mostly driven by the growth that people have seen financially, the early adopters, and where they are right now. There's that famous YouTube video of the guy who was telling people to buy Bitcoin when it was at $1, right? And I remember the other day someone asked, we really want to see this guy's portfolio. We need to see where he is in terms of the Bitcoin he bought at $1. So, as with a lot of things, when there's hype around one particular token on the crypto space, you'll see a lot of movement in that direction. But one thing that I'm a big advocate for is utility within crypto, right? Even when we're talking about stable coins, there's a lot of stable coins in the market. But the most popular ones still remain USDC and USDT. It's not necessarily because they do anything better. And if you were to get into the technicalities, you'll see a lot of institutions preferring USDC over USDT because USDC is regulated, and I put that in quotes. But those are the technicalities behind it. USDT has more hype, has more liquidity. So if you're talking stable coins, a lot of people will talk USDT. So now we have the privacy coins, USD1 being a privacy stable coin. And there's a lot of hype around it again. It's just how the market works right now. You know, Trump launched his coin, there's Dogecoin by Elon Musk, and there was hype around all of those altcoins, but there was no utility to them. So at the end of the day, I would say, regardless of what we mention up front here, what you also mention, you are the investor. It's you to have to do your own homework, find out what am I investing in, what am I getting myself into. If I want to buy my stable coins so that I can use it for remittance, which one has the best liquidity? All of that is information that you can find. So unfortunately, at the stage where crypto is right now, it's a matter of doing a lot of homework on your side. There's no one who will come and tell you this is the sure way of doing things. It's just wewe kujituma, do your thing, put your money wisely where you personally believe in. Yeah.
Maybe I can just pick from where Saruni has left. So on the topic of privacy coins, on building on your knowledge, I think from last year we saw a huge uptake, maybe a huge appetite for privacy coins, more so Monero and Zcash. More so after the key figures, the likes of Balajis and Naval were very positive. Maybe they had very positive sentiments. Them talking about that crypto is now shifting to the privacy era. So you can listen to the likes of Balajis, the likes of Naval on their takes on maybe why they prefer, maybe they think that privacy coins are going to be big. But then again, there's a guy called Derek Sivers who runs the channel, the YouTube University. If you listen to him, he has a lot of negative sentiments on the privacy coins. He says they have literally no utility. So if you listen to both sides of the story, I believe you'll be more at a better place to make a more educated decision. It's all, like Saruni has said, it's all about trying to educate yourself, trying to do your homework, and trying to put your money where your mouth, or maybe where your conviction is at the end of the day. Going to the other questions. So there's a question directed to me on cycles at NSE and profit taking on the NSE. So like I had mentioned earlier, the NSE has been on a very good run the last 2 years, and maybe 3 years if you add 2026. And the factor of profit taking has been a pretty big issue because after 2024, the NSE was ranked as the best performing bourse in sub-Saharan Africa with a 34% return on the Kenyan shilling and a 70-something% return on the USD. Then last year again, it was up again 51% both on the Kenyan shilling and the USD because the Kenyan shilling was almost pegged to the USD for the last couple of years. So again, ranking the second best in sub-Saharan Africa. So now the question is, if you look at, people are trying to time the market top. So 2024, the end of 2024, the guys who are saying the top is here. 2025, the guys who are saying the top is here. 2026, we are only in Feb, and we are already up 12%. Actually, a week before, we were up by 15%, but this week we have seen some profit taking. And I think the last 4 consecutive trading days, the NSE has actually closed on a negative for the day. So the question on profit taking, it's all about trying to be how can I put it? Trying to understand markets and trying to judge it, maybe to evaluate it on a daily basis. Because if you look at the macros and also the fundamentals of the different companies, you will still want a piece of the cake of the NSE, and you can't really call it quits on majority of the companies, because like Anthony had mentioned, frontier markets had remained undervalued. Maybe people they were oversold for the last maybe 2 or 3 years, because the NSE was actually in a bear run since 2017 to around 2023. So it was a lot of ups and downs. And then also the 2022 issue with the Russia-Ukraine war that led to a difficult time in the markets, not only in the local markets, but global markets again. It was a big challenge. It's all about taking it day by day, looking at the macros, because currently, like I mentioned, we have so many good things that are happening in the NSE. And actually exiting now, it's like leaving a party at 7 p.m. So I think it's all about trying to have a feeling of what is going on, because even when you are out, maybe there are guys who are out here partying yesterday, you don't want to leave before the best time. So maybe you are listening to maybe how the DJ is selecting his music, if the other guys who are leaving, if maybe it's starting raining, if maybe there's traffic on your route. So there are a lot of things that you are going to look at before you actually decide to leave. So maybe there was a main performing artist was expected, so you can't leave before he performs. So the same thing happens with markets. So just have to keep an eye on valuations, look at macros, look at sentiments, and then again, try to position yourself strategically. Because there's no one who usually sees that this is the right time to enter the market and this is the right time to leave the market. It can only be understood in hindsight. So it's, for me, I'll say just have a feeling of the market. If you are heavily invested, follow the sentiments on the ground, follow the macros, and also follow the company earnings results, and also try to read a lot of reports by various investment banks as well, just to be more educated on what's happening. Because guys who sold Kenya Power at 10 bob, we are currently at 19 bob. The guys who left other companies like DTB at 100 bob, we are at 150. So you don't want to regret leaving early. But then again, there's never been a mistake of taking profits at the end of the day, because you don't want to overstay in the market and then all your paper wealth is gone. So it's always safe. If you have doubled your money, you can always rotate your capital to other markets whereby you feel they are a bit undervalued. Then maybe the last question on quantitative finance. There's someone who asked about quantitative finance. So quantitative finance is a very interesting area. So if you have read about Jim Simons, who was arguably maybe the world's best quant trader. So he was able to achieve a lot of success in investing by applying statistics, algorithms, and all these complex models for him to have an edge over his competitors. And he has actually been, I think he's the one investor, maybe money manager, who has been able to deliver better results than all fund managers, even the likes of Warren Buffett, even though he did it for a smaller time frame, and he also limited access to his funds after it had blew up. So it's an interesting area. If you have an edge there, quants are very important people in the finance space. You can easily find yourself working for the likes of JP Morgan, the likes of BlackRock. Quants are pretty important workforce in the investment space. Thank you.
Hello. Hello. You good? All right. Checking to see if there's any question we have missed. So on quantitative finance, I will say one thing. If you decide to go quant, which basically means you are trading based on data, then you need data from both sides. And this basically means that you need to know what's happening in the markets that you're trading. So if you decide to go quant, you have to go futures way, or you have to go the crypto way. So we all know that transactions in crypto are public, so you're able to see as much data such as the market depth and the amount of liquidity in the market. So if you decide to go the quantitative way, you have to focus on futures or crypto, don't go spot. On the question about the BTC network being a bit slow, it's slow by design to make sure that the network is secure. So far, it's the most secure network in the world, has never been hacked, has never had downtime, it has been online since 2009. And anyone who decided to hold some Bitcoin for over a period of 4 years, they have always 100% been in profit. So it's a network that has stood the test of time. If you want to go Ethereum, I don't know when it is going to get back to 5K, but 4K. Yeah, like I don't know when it will get to 5K. Like it's almost impossible. Every time it tries going up, this guy, we call the thin guy, Vitalik, he rushes right back to sell some of his coins, never buys. On the other side of BTC bottom, this has been the strategy. I know Gichuki has mentioned that there's no right time to buy, but I think there is. Buy when there's blood in the streets, even if the blood is your own. I don't know, I'll try to make it simpler. When you say buy when there's blood in the streets, it basically means buy during the bear market. I think we mentioned on the pod last time, if you convinced your uncle to buy Bitcoin at 126K, you wouldn't be in good speaking terms today, right? You are better off if you convince them to buy it today at 66K or 65K compared to convince them to buy at 124K. So buy when there's blood in the streets means buy when the prices are moving down. When we say even if the blood is your own, it means that even if you previously held some Bitcoin and price went down, then some of the blood is your own, find those opportunities. Warren Buffett has been known to be one of the most prolific investors in the world, and all he does is buy when prices are low. So whenever prices are really low for a valuable asset, that's the time to be looking for buying opportunities. So lastly, on the education side, Bullish Banter is education first. So if you haven't watched any episode of Bullish Banter, make sure to check it out. So we interview all kinds of traders, investors, analysts. We look at what's currently happening in the market. Sometimes you might not know something is developing, and then you might hear it on Bullish Banter. I remember the first episode we did for the year with Jesse. We mentioned about a stock called SanDisk, and we talked about memory shortage. Back then, I think it was the first week of January, the stock was up 40%, 40% since the year started. That was, I believe, on the 7th of January. If you look at SanDisk stock today, you'll notice that it's up way over 100% since we mentioned it. So sometimes you'll get these hidden alpha simply by just listening to Bullish Banter. So on top of that, for the traders in the house, we have what we call the Market Snapshot series. So on the Market Snapshots, this is a daily session we do, Monday to Friday. I do it with my colleague, Robert. He'll be joining us shortly. We also have Emmanuel from Uganda, Kampala. We have Kaka Wataifa from TZ. So on these sessions, daily at 11 a.m. on YouTube, you're able to learn what's currently moving the market today. So we talk about the major currencies, ranging from the dollar, euro, pound, yen, Audi, and New Zealand dollar. We talk about what's happening in gold as well as silver. We look at the oil markets. We look at top US equity indices as well as European equity indices. We also focus on the Nikkei. So from there, you're able to understand what are the key events for the day, including economic releases, how they may impact the markets. You also look at Bitcoin. Then from there, you're able to generate or gather an idea of where to be focusing on. Maybe Trump said something last night. Well, let's say he was on a plane, or he decided to do a tweet, and that has an impact in the markets. So what we do is give you this information in a timely manner. And since this is a daily session that happens Monday through Friday at 11 a.m., it doesn't mean that every time there's an update, you'll get it at 11 a.m. So on top of that, what we have done is create a community on Telegram. So now we have a live Bullish Banter community where if you have a question, you can easily drop it and somebody will respond to you. So it's not like, how we have the region and guys at the front are telling you everything to do. So in Bullish Banter community, it doesn't work like that. It's traders versus traders. So we communicate, we share ideas, we challenge each other, and if there's an update, tutaweka. Tukiona kitu imeshoot sana tunasema hey, angalieni huku bana. So make sure to join the Bullish Banter community. I believe we should have QR code to join. It's also available on all our socials, so make sure to check it out. I believe that was the last question that was not addressed. So thank you everyone. Thank you for your time.